Welcome back to Profit Show, and today we are diving into one of the most extraordinary and perhaps historic financial events of our generation for years. Whispers of a global financial reset have echoed across investment circles and online forums. Some dismissed them as rumors, others held tightly to their hopes, waiting for the day when speculation would finally give way to confirmation. And now evidence is surfacing that something unprecedented is taking place inside the very core of the American banking system. Reports are emerging that across the largest banks in the United States, a synchronization has occurred. A synchronization so remarkable that it has never before been observed in modern financial history. Banks that normally compete fiercely with each other. Institutions like Chase, Wells Fargo, HSBC, and Bank of America are now said to be showing the exact same exchange rates for certain foreign currencies. Not just roughly similar, not just close enough for coincidence, but identical down to the decimal, even more stunning. This synchronization appears to stretch into specialized Tier 1 redemption centers, the hidden backrooms of finance where only the most significant transactions are carried out. This development changes everything for decades. One of the strongest arguments against the possibility of a coordinated global currency reset was the fragmentation of data. Every bank, every institution operated on slightly different systems with their own timing, mechanisms, and independent rate feeds. The idea that they could all move together in perfect harmony seemed logistically impossible. Yet according to the leaks, we are now seeing that impossibility may have just become reality. The first signs did not come in flashy press conferences or headlines from the Federal Reserve. Instead, they trickled out quietly, as so many earth-shaking changes often do. It began with internal memoranda, passed discreetly among senior banking personnel. Memos filled with the kind of technical jargon that usually hides monumental truths beneath layers of bland corporate language. Phrases like synchronization protocols achieved or live rate confirmations in test environments could easily be mistaken as routine maintenance notes, but those who understand the coded world of finance recognize their deeper meaning. Then came the screenshots allegedly pulled directly from secure banking terminals and rate tables. These were not tables showing staggered feeds, or slightly different numbers from one bank to another. They were mirror images, perfect reflections, suggesting that the system itself had been fundamentally aligned. Investors who had doubted for years began calling their contacts hedge fund managers, spoke with bankers, equity strategists, whispered with traders, and one by one confirmations rolled in. Yes, the rates were identical. Yes, the synchronization was real. And yes, the long-standing argument that fragmentation made a reset impossible was now gone. Think about what this means for a moment. When banks show identical synchronized rates, they are no longer running simulations. They are preparing for execution, as one insider reportedly said. When rates lock across institutions, the era of testing is over. That simple statement cuts to the heart of what is happening in finance right now. A transition from theory to practice, from speculation to operation readiness. In the world of banking, readiness is not casual. Readiness is the last step before the switch is flipped. For years, currency traders have exploited small differences between institutions. This practice, called arbitrage, relies on mismatched feeds. One bank might be showing one rate, while another shows a slightly different one. Traders can then buy in one place, sell in another, and pocket the difference. But synchronized rates close that loophole. They eliminate the gaps that fuel arbitrage, shutting down opportunities for instability, manipulation, and volatility. What we are seeing is not just a technical adjustment, it is the sealing of a crack in the global financial structure. A crack that has been there for decades. The impact of this synchronization extends far beyond American shores, because when U.S. banks align in this way, the signal reverberates across the entire globe. European banks, Asian banks, African financial institutions all look to America as the bellwether. The moment the United States financial giants move in harmony, the rest of the world is forced to pay attention. And so we come to the currencies that have long been the subject of speculation: Iraq, Vietnam, and Zimbabwe. These nations have carried currencies that many investors have held onto for years, waiting for the elusive moment when they would rise from undervalued or unstable status to globally recognized assets. The Iraqi Dinar has perhaps been the most discussed of all, tied tightly to the nation's fiscal reforms and its quest for international acceptance now, with American banks allegedly aligning their rate tables. The foreign exchange community is buzzing with the possibility that the dinar may finally appear live on global trading screens. If that happens, decades of skepticism will evaporate overnight. Vietnam's dong is another key player long described as fundamentally undervalued. When compared to the nation's powerful export economy, many analysts believe that its true value has been suppressed for years. If synchronization confirms its alignment with Western institutions, the market will have no choice but to rebalance and reprice it dramatically. A correction that could happen far faster than most people imagine. And then there is Zimbabwe, a nation haunted by hyperinflation and a history of devastating currency collapses. If the world moves towards synchronization, Zimbabwe will face an unavoidable decision to either align with global norms and regain credibility, or risk being left permanently marginalized and irrelevant in the new system. The stakes could not be higher. But beyond the technical mechanics, beyond the economic charts and rate tables, lies something even more powerful. The psychology of the moment. Imagine being an investor who has held these currencies for years, enduring ridicule, skepticism, countless false alarms, and endless delays. Now at long last, the marker that experts insisted would be the signal of real execution. Synchronized rates has appeared for these individuals. The event is not just financial. It is personal. It is validation. The guidance being shared among serious analysts is clear. Preparation must replace anticipation. This is no longer a time for rumors. It is a time for facts and readiness. Practical steps become essential. Make sure your identification documents are current. Make sure your currency notes are clean, undamaged, and authentic. Make sure your receipts and proof of purchase are intact and easily accessible, because when the moment arrives, banks will not be forgiving. Of disorganization, structured appointments are expected, with major institutions likely to schedule exchanges to manage overwhelming demand. And here's where professionalism matters. When contacting your bank, do not ask about resets. Do not speak about rumors or hype. Simply call the dedicated foreign currency desk and ask calmly and clearly if your institution is currently processing exchanges for your currency, and if so, what the procedure is for scheduling an appointment. That is it. Nothing more, nothing less. You are a customer requesting a standard service, not a speculator chasing conspiracy. The staff are trained to handle professionalism, not hype. And remember to get everything in writing. If a bank representative confirms a process, request that it be sent through secure channels like an official email or account message. Do not rely on verbal promises alone. Document every conversation. Date, time, name of representative, and exact details. This paper trail protects you and ensures clarity. The temptation to rush or panic will be immense, but the experienced voices stress the same message. Stay calm, maintain composure. Discipline is the difference between success and chaos. Right now, excitement can cloud judgment, but professionalism will open doors. Banks want clients who are steady, reliable, and prepared. Not emotional, not erratic. Industry experts add even more urgency to this moment. A Wall Street analyst noted that liquidity events ripple faster than stock shocks, meaning by the time mainstream headlines confirm what is happening, the real window may already be closing. A Middle East policy expert emphasized that Iraq has aligned this shift with broader fiscal reforms, restructuring budgets, tackling corruption, and signaling to the world that it is ready to move beyond its unstable legacy. This is not just a technical flip of a switch, it is a calculated geopolitical pivot. And perhaps most telling of all, an insider tied to the U.S. Treasury has been quoted saying alignment signals final settlement, readiness. Those words, settlement, readiness, carry precise meaning in finance. They are used when all obligations have been met and systems are prepared for definitive execution. Not more tests, not more simulations, but final, live reality. At this point, the message becomes undeniable. Speculation has ended. Preparation must begin. Every major barrier that once stood in the way of a coordinated global shift appears to have been dismantled. Synchronization is visible. The architecture is ready. The final markers are flashing, and history may already be in motion. This is where we pause in our exploration, but only briefly, because the second half of our journey takes us deeper into the step-by-step process of what you, as an individual, should be doing right now: how to prepare, how to protect yourself, how to avoid the pitfalls of misinformation, and how to position yourself for success in a moment that may define financial history for generations to come. Now, as we continue on Profit Show, it is time to shift from the revelation of synchronization and its global meaning into the real-life personal journey of what happens next and how ordinary people, investors, collectors, and even casual holders of foreign currency can navigate what may be the most significant financial moment of their lifetime. Remember, the rules have changed. Speculation is giving way to confirmation, and confirmation requires preparation. The first, and perhaps most important, principle is documentation in the world of finance. Documentation is proof. It is your shield, your passport, and your security blanket. Without it, you are exposed. With it, you are protected. Banks and redemption centers operate on strict compliance standards. They must verify every detail of every transaction because they are subject to regulatory audits and internal reviews. Therefore, your identification must be flawless. Your driver's license, passport, or state-issued ID must be valid, unexpired, and free of discrepancies. If there are differences in spelling between your ID and your bank account, make sure to correct them in advance, because small mismatches can cause large delays. Your second layer of documentation is proof of your currency. Purchase. This means receipts, invoices, or dealer confirmations. If you bought your currency from a licensed dealer, keep every email, every invoice, every paper copy in a folder ready to present. Do not underestimate the importance of this step, because banks will differentiate between legitimate holders and those who cannot prove legal acquisition and compliance. Heavy environments' lack of proof means rejection. And then there is the currency itself. This is not just paper, it is a financial instrument. And banks will only accept it in presentable condition. Torn, stained, or damaged notes may be rejected outright or sent for additional verification, causing unnecessary delays. Keep your notes flat, organized, and preferably in protective sleeves. If possible, label them clearly by denomination and country order. Creates credibility, professionalism, inspires confidence. Remember, presentation matters. Once your documentation is complete, the next step is understanding the appointment process, because major institutions cannot handle a flood of walk-in clients during such a pivotal event. Appointments are expected to be the norm. Large banks will set up structured systems to schedule clients, perhaps through secure online portals or direct phone calls with foreign currency desks. When you make this call, professionalism is essential. State clearly that you are a client seeking to exchange foreign currency, and ask politely about the process for scheduling your appointment. Do not mention resets or rumors. Do not speculate about values. Speak only about the service at hand, because in the eyes of the bank, this is simply a currency exchange. When the appointment is scheduled, expect that security will be tighter than normal. These are not casual teller transactions. You may be directed to a private office or a secure redemption room. Your documentation will be checked again. Your currency will be verified under specialized machines. Ultraviolet scanners, magnification tools, and authentication software will be used to confirm that your notes are genuine. And once confirmation is achieved, your transaction will proceed based on the live synchronized rate visible to the banker. That rate will not be negotiated. It will not be haggled. It will be set by the system itself, because synchronization has eliminated variation across institutions. This is why the appearance of synchronization is so critical. It signals that the rate you see in one institution is the same rate visible in another, meaning the era of shopping for marginally better numbers is over. Arbitrage is closed, the playing field is level, and the process is unified. The fairness of this system protects both the banks and the clients, because it ensures that no one is disadvantaged by timing or data discrepancies. Now consider the psychological dimension of this moment for many people who have waited years or even decades. The emotional weight of seeing synchronization confirmed will be overwhelming. There will be an urge to celebrate, an urge to shout from the rooftops, an urge to tell everyone they know. But the most seasoned voices offer the same advice: discipline, discipline, discipline. Do not broadcast your business to the world. Do not draw attention to yourself. Financial history is filled with examples of people who lost their blessing because they failed to guard their privacy. Discretion is not just wise, it is essential. Once your exchange is complete, your journey is not over. It has only begun because now you face the responsibility of stewardship. Sudden wealth has destroyed as many lives as it has blessed, because without preparation, wealth becomes a curse. This is why the second phase of your journey must be financial literacy. Seek out professionals who can guide you, accountants who understand wealth management, attorneys who can assist with trusts and structures, financial advisors who can help diversify and protect your assets. But choose carefully. Not every advisor is aligned with your best interest, and not every firm prioritizes client success over their own profit. Ask questions, demand transparency, and never sign documents you do not fully understand. One of the smartest steps you can take is to establish a layered strategy for your newfound resources. Allocate some to immediate security, such as clearing debts, paying off mortgages, or securing reliable transportation. Allocate some to medium-term growth, such as diversified investments in equities, bonds, or real estate, and allocate some to long-term legacy, such as setting up trusts for your children or endowments for causes you believe in. By structuring your wealth in layers, you create stability across time, ensuring that your blessing outlives the emotional high of the moment. Another critical area is taxation. Sudden wealth will attract the attention of tax authorities like a magnet. Ignoring this reality can create devastating consequences. Therefore, you must proactively plan with licensed tax professionals who understand the complexities of foreign currency exchanges and large capital events. Remember, taxes are not optional, they are mandatory. But with the right strategy, you can minimize your burden legally through deductions, credits, and properly structured vehicles. Philanthropy is another dimension that cannot be overlooked. History shows that wealth without purpose often leads to emptiness, but wealth aligned with purpose brings fulfillment. Think carefully about the causes you care about, the communities you want to uplift, the legacies you want to leave behind. By channeling a portion of your resources into meaningful projects, you transform your blessing into a generational impact, and perhaps even into a story that echoes long after you are gone. At the same time, caution must be applied because sudden wealth also attracts opportunist individuals who appear as friends, advisors, or partners, but whose true motives are selfish and harmful. Guard your circle, protect your access, be polite but firm in rejecting schemes that do not align with your goals, and do not let guilt pressure you into commitments that compromise your security. Generosity must be balanced with discernment. And now, let us step back and consider the larger geopolitical context of what this synchronization means for the world. The alignment of major U.S. banks with Tier 1 redemption centers is not just about currency revaluation. It is about the reshaping of global economic order. Nations that once operated on the margins are being drawn into the center. Iraq is aligning its fiscal reforms with global institutions. Vietnam is preparing its export economy for fair valuation. Zimbabwe faces the choice of reform or irrelevance. This is not just about money, it is about sovereignty, stability, and integration into the international system. The United States, by spearheading this synchronization, signals its intent to remain the anchor of the global financial order even as competitors rise and alternative systems emerge. By unifying its banks under synchronized rates, it projects strength, stability, and control, sending a message to allies and rivals alike that the dollar-anchored system remains supreme. And yet the implications extend further. Technology has enabled what once seemed impossible. Global synchronization was unthinkable in the past because systems were fragmented and incompatible. But modern digital architecture, blockchain verification, and real-time data networks have closed the gaps. What we are witnessing is the digitization of global finance at a scale never seen before. A glimpse into the future where currencies and perhaps even commodities operate under unified, transparent systems, eliminating arbitrage, corruption, and manipulation. This is why analysts say that the synchronization we are now witnessing is not the end, but the beginning. It is the prelude to an entirely new era of global finance, an era where information travels instantly, where rates are universal, and where transparency replaces secrecy for investors. This means opportunity for nations, it means accountability, and for the world, it means the dawn of a new chapter in economic history. As we come to the conclusion of this journey, remember this truth. Speculation has ended, preparation must begin, synchronization has been observed, validation has been achieved, the impossible has become reality. And now the question is not if but when, and the responsibility rests with you, the individual, to be ready. Ready with your documents, ready with your professionalism, ready with your discipline, ready with your strategy. Because history does not wait for hesitation. When the door opens, it opens briefly, and those who are prepared will walk through, while those who delay will watch from the sidelines. The great transfer of wealth is not a myth. It is a mechanism, and that mechanism has already been set in motion. Because history does not wait for hesitation. When the door opens, it opens briefly, and those who are prepared will walk through, while those who delay will watch from the sidelines. The great transfer of wealth is not a myth. It is a mechanism, and that mechanism has already been set in motion. The final markers are flashing, the systems are aligned, and the time is now. This is Profit Show, reminding you that the greatest opportunities in life belong to those who are prepared, those who stay calm, those who stay disciplined, and those who act with wisdom. In the face of change, we stand at the edge of financial history, and the choices you make in these moments will echo for generations. The reset is no longer theory, it is reality. Synchronization has sealed it, and readiness will define it. So prepare yourself, align your strategy, guard your privacy, protect your blessing, and step confidently into the future, because your moment, your opportunity, and your legacy are waiting. And when the history of this era is written, let it be said that you were among those who were ready.